First of all, let's ask the question, how much money are we actually talking about? Do we even know?
We don't know yet. In the hours after the Treasury report, Wall Street analysts got working on this very question, and we got some notes that gave us some indication. Bank of America analysts thought that if everything got enacted that the Treasury Department recommended, it could mean as much as $2 trillion in additional balance sheet capacity at the banks and lending capacity. So Goldman Sachs analysts came up with a number, capital that the banks wouldn't need after this of $100 billion. So
there's a difference between $100 billion and $2 trillion in estimates?
They are looking at two different things. So I guess they shouldn't be put equivalently, but there is no common agreement yet on what this is going to mean.
So, Dakin, the big question, where's the money heading? I mean, is it going to head back into the economy, or is it going to get into the pockets of the shareholders?
It's a good question. And certainly, I think the Trump administration would like all of it to go into the economy. I mean, Trump himself has said repeatedly that one reason to overhaul banking regulation is to get banks lending more, to allow them to do their part in spurring economic growth. Now, the folks we've talked to have really said, well, you know what, banks might end up giving a lot of this back to investors. Banks already have capital that they aren't using to lend, that they're giving back to investors. So it's not like there are people knocking on the doors at the bank saying, hey, give us loans, give us money, and the banks are saying, we'd love to, but we don't have enough. So it seems like there isn't an indication that that there's a huge amount of demand that the banks haven't met, which is what these proposals seem to assume on a certain level.
And on the buyback and dividend front, Dakin, I mean, is that the best use, the best way of putting this money to work or not?
It's a good question. There's some debate about that. I mean, we spoke to one person for today's story who said, you know what, however that money gets out into the economy is okay. So the banks could give it back to shareholders by buying back their shares or paying higher dividends, and those shareholders then have some money that they can go do something else with. Presumably, they'd put it into another industry that has higher growth prospects or something like that.